Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the 7th and 8th problem on assessment of individuals. So far till the last video I have completed 6 problems on computing the total income and tax liability of an individual. Hope my regular viewers are watching each and every video, got a good command on the subject of advanced aspect of income tax. Don't join in between, in the middle. You may not be able to understand. So all the problems are based on the provisions of Income Tax Act 1961. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject advanced aspect of income tax. Watch the first video theory I have given regarding how to compute the total income of an individual. Then starting first to second video are very important because later videos are dependent on the initial videos. Now before starting the 7th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always take a printout hard copy and keep it ready before watching the video. Take a screenshot of the solution of 7th and 8th problem. Then I'll explain all the points of the problem. Come on, now I am starting the 7th problem. See carefully. Sri Das Gupta, physically handicapped person and is working in a public limited company for the last 20 years. So remember the basic points given. SSC is physically handicapped. When a person is physically handicapped, he will be allowed a deduction under section 80U. First point you have to remember. Then he is working in a limited company for the last 20 years. That means the SSC is a non-government employee. His income particulars for the previous year 2021 are as under. Compute the total income for the assessment year 21-22. As usual, our current assessment year is 21-22 and the previous year is 2021. So here first point, salary received for the year 6,36,800. That means we have to compute the income from salary. Salary received is given. So standard deduction under section 16 1A will be allowed. So salary received 6,36,800 and claims profession tax paid 5,100. Yes, of course, the SSC can claim. The SSC will get deduction under section 16(3) for profession tax paid. So this 5,100 will be allowed as deduction. Then and rupees 1,000 for purchase of books. The SSC has purchased some books. Now he wants to get the deduction for purchase of books. Sorry, Income Tax Act will not give any deduction for purchase of books. Because Income Tax Act says one standard deduction is given for all incidental expenses related to employment. So no separate deduction will be given for purchasing the books. Simply after completing the answer, you have to give a note. In that note, you should write that for purchasing the books, no deduction will be allowed under section 16. So always I suggest you, while watching this video, keep a notebook and pen. Whenever I say something new point, immediately you should write it down. Then only you can be able to remember the provisions. Otherwise, so many provisions are there. There is possibility you will forget it. So here, no deduction will be allowed for purchasing the books. And rupees 5,000 for entertainment as deduction. No. EA deduction will be allowed only when EA is received and that too by government employee. First, EA deduction will be allowed if the SSC is receiving the EA. Secondly, deduction will be allowed only if he is a government employee. For non-government employee, EA deduction is not allowed. Here, the SSC is a non-government employee. So, EA deduction not allowed. So, here, purchase of books and EA deduction will not be allowed. You have to write a note. Now, how to compute income from salary? See carefully here. Computation of total income of Sri Das Gupta for the assessment year 21-22. First, we are computing income from salary. Salary received 6,36,800 given in the problem. From this, deductions. There are no allowance, there are no perquisites, only basic salary is given. From this deduction under section 16, first compulsory deduction, standard deduction under section 16(1)(a), that is fixed 50,000. 50,000. Secondly, profession tax paid under section 16(3), 5,100 given in the problem. This bracket denotes deduction. So 636,800 minus 50,000 minus 5,100, 5,81,700 is the income from salary. Now income from house property. Second, rent received from house property 84,000 per annum, municipal taxes 8,400, repairs 12,000, interest on mortgage loan 41,500. We have to compute income from house property. Already we know the procedure of computing income from house property. First we should take the GAV, gross annual value. Normally gross annual value will be taken higher of the three: municipal rental value, fair rental value, actual rental value. But in our problem, municipal rental value not given, fair rental value not given, actual rent is given. That itself is the GAV. So gross annual value 84,000, that is the rent received. From this, deduction will be allowed. Municipal taxes paid by the SSC. Yes, municipal taxes 8,400. Deduct will get net annual value. It is called NAV. So we got NAV 75,600. From NAV, two deductions are allowed. Only two deductions. 24A and 24B. 24A deduction will be allowed. Standard deduction, compulsory deduction, 30% of NAV. So 30% of this 75,600, 22,680. 22,680 is the standard deduction. Second deduction will be 24B. Interest on loan taken for purchasing the house, constructing the house, repairing the house, renovating the house, or reconstruction of house. For this purpose only, if loan is taken and interest is paid, then only deduction will be allowed. In our problem, interest paid on mortgage loan not allowed as deduction. Income Tax Act says if the loan is taken for purchasing the house, constructing the house, repairing the house, renovating the house, or reconstruction of house, then only interest will be allowed. Mortgage loan interest will not be allowed as deduction. Must be noted. So after completing the solution, you must write a note. No deduction will be allowed for repairs. No deduction will be allowed for interest paid on mortgage loan. That's it. So deduct 22,680, the income from house property 52,920. That's it. Next comes gross interest from taxable securities 23,800, collection charges 60. Interest from securities, this is taxable under income from other sources, and Income Tax Act says any collection charges incurred to get the interest on security will be allowed as deduction. So here I have taken income from other sources. Interest on security 23,800 minus collection charges 60. So ultimately income from other sources 23,740. Next comes long-term capital gain on sale of silver ornament. This will be taken income from capital gain. So here you can see income from capital gain, long-term capital gain, LTCG on sale of silver ornaments 85,000. Directly I have taken. Next comes profit from wine business, loss from general store business. That means the SSC is having income from business. So here I have taken income from business. So he is having three different types of businesses: non-speculation, speculation, and specified. These three types of businesses he is having. So first of all, we'll take non-speculation. The wine business and the business of store, general store business. Wine business and general store business, these are non-speculation. So first we'll make intra-head set off. Intra-head, within the same head. So here profit from wine business 45,000 minus loss from general store business 27,200. So this can be deducted. General store loss, wine business profit, set off. So 17,800, this is the income from non-speculation business. Now speculation business, profit from speculation business is 69,820 and loss from speculation business 27,500. So we can deduct the speculation loss from speculation profit. So profit from speculation 69,820, loss from speculation 27,500, deduct 42,320. Now come to specified business. Last one it is given, profit from specified business 83,000 and loss from specified business 2 lakh. One point already I have explained you in the previous video. Specified business loss cannot be set off from any other income. It should be carried forward to the next year. It can be set off only from profit of specified business. So loss of specified business can be set off only from profit of specified business and nothing. From no other income it can be set off. So here specified business profit is 83,000, loss is 2 lakh. So 83,000 minus 2 lakh. 83,000 minus 2 lakh. You will get 1,17,000 loss. This 1,17,000 specified loss should be carried forward to the next year. And in the next year it can be set off from specified business. That's all. So I have taken all the items. Now take the total. Income from salary 581,700, income from house property 52,920, long-term capital gain 85,000. Then income from business, non-speculation 17,800, speculation 42,320. Specified there is no income. Income from other sources 23,740. Take the aggregate of all incomes, will get the gross total income. The gross total income is 8,03,480. Now from these deductions under section 80 are allowed. So first 80C. Here it is given qualified saving 1,61,000 in the problem it is given. But Income Tax Act says qualified saving will be allowed as deduction under section 80C for a maximum of 1,50,000. So there is a maximum limit. So qualified saving 80C 1,50,000. Then 80D medical insurance premium. Here it is given mediclaim premium paid in cash 11,400 not allowed. Income Tax Act says medical insurance premium will be allowed as deduction only if it is paid other than cash, not in cash. If it is paid in cash, not allowed. So here it is given mediclaim premium paid in cash 11,400 not allowed. So after completing the note, you should give a note that mediclaim insurance premium is not allowed as deduction under section 80D because it is paid in cash, and including 7,100 for preventive health checkup expenses. From the current assessment year onwards, Income Tax Act says medical health, preventive health checkup expenses will be allowed as deduction even if it is paid in cash up to rupees 5,000. That other than cash rule will not apply for preventive health checkup expenses. So for preventive health checkup expenses, it is allowed as deduction for a maximum of 5,000 even if it is paid in cash. So here under section 80D, medical insurance premium up to 5,000. Only 5,000. Actually it is given 7,100. It is not allowed. Only 5,000 will be allowed. Now 80G. Donation under section 80G. Deduction rate 50%. Directly given. So 11,000 50%. 5,500. That's all. Now one point is given in the problem that the assessee is a physically handicapped person. So deduction under section 80U will be allowed. Deduction under section 80U will be allowed for a maximum amount of 75,000, assuming that the assessee is normally disabled. It is not specified in the problem whether the assessee is a normally disabled or severely disabled. So here income tax rule is if the assessee is normally disabled, 75,000 will be the deduction. If the assessee is severely disabled, 1,25,000 will be the deduction under section 80U. So here nothing is given. So we assume the assessee is a normally disabled person. So that's why 75,000 will be the deduction under section 80U. So here you can see under section 80U physically handicapped 75,000. Take the total of these four amounts 2,35,500. Deduct 803,480 minus 235,500, 5,67,980. This is the total income. While explaining a number of points I have explained you, so always write it down as a note. In examination you must write all these points. Like 80U, it is not specified in the problem, but we should write in working note the SSC is a physically handicapped person, so deduction under section 80U will be allowed. Assuming that he is normally disabled, so deduction will be up to 75,000. That's it. Similarly, the qualified saving. Qualified saving deduction will be given only for 1,50,000, not the actual amount. Medical insurance. Medical insurance premium, if it is paid other than cash, then only it will be allowed. If it is paid in cash, not allowed, except in case of preventive health checkup. If preventive health checkup expenses are paid, even if it is in cash, it will be allowed, but up to a maximum of 5,000. All these points you must write in notes. That's it. Now, eighth problem I am reading out. The following incomes are received by Mr. Natwar Singh. Compute total income for the assessment year 21-22. So here you can see computation of total income of Mr. Natwar Singh for the assessment year 21-22. First item, income from agricultural land in Punjab state. Already in the previous video I told you, agricultural income in India is fully exempted from tax under section 10 subsection 1. So any agricultural income earned in India is not taxable. So in working note you should write down, after completing the solution, in working note, agricultural income from Indian land, that is not taxable, exempted. Second, income from agricultural land in Pakistan, that is taxable. So any agricultural income earned abroad, outside India, that is taxable in India. So here I have taken income from, so other sources. Actually it will come under income from other sources. Agricultural income from Pakistan, 33,000. Next, income from house property for the building in Jaipur, 92,000. So directly it is given income from house property. So no need to compute. Directly we will take income from house property, 92,000. Next, ground rent received from land in Mumbai city, that is taxable under income from other sources. Income from other sources here. Ground rent, 2,10,000. Next, receipts from poultry farm, 3,05,000, and expenses 1,87,000. This is also taxable under income from other sources. Poultry farm 3,05,000 minus expenses 1,87,000, 1,18,000. Interest on Bank of Baroda 28,000. Interest received from bank deposit, that is also taxable under income from other sources. So here income from other sources, bank interest 28,000. Including 1,200 rupees on saving account. When an SSC earns interest on saving account, he will be allowed deduction under section 80 TTA. Under section 80 TTA, if interest on saving bank is received. So here it is given 1,200. That 1,200 will be allowed as deduction under section 80 TTA. Natwar Singh's father, who is a senior citizen, is suffering from a notified disease. An amount spent in the hospital rupees 3 lakh. Under section, deduction will be allowed under section 80 DDB. If the SSC has spent some medical expenditure on a dependent relative who is suffering from a chronic disease, then deduction will be allowed under section 80 DDB. The amount is 40,000. If the dependent person is a super senior or senior citizen, the limit is 1 lakh. Irrespective of the actual amount spent, ignore the actual amount spent. The actual amount spent here given is 3 lakh rupees. Ignore 3 lakh. Fixed amount is given by the Income Tax Act. So deduction under section 80 DDB is 40,000 or 1 lakh. If the dependent person is super senior person, 1 lakh. So here in our problem it is given he is a senior citizen. Senior or super senior? 1 lakh rupees is the amount of deduction under section 80 DDP. Long-term capital gain, LTCG 2,80,000. You can see here, income from capital gain. LTC, long-term capital gain on painting, 2,80,000. Next page. Long-term capital gain on sale of shares. Long-term capital gain on sale of shares, 5 lakh. Short-term capital gain on sale of shares, 1,80,000. Then short-term capital gain on sale of land, 1 lakh. Remember, this short-term capital gain on shares is a special income on which there is a flat rate of tax of 15%. For the purpose of calculating total income, I am including here. But later on, if we want to calculate a tax liability, we have to separate it, because the tax rate on short-term capital gain on shares is 15% flat. Similarly, long-term capital gain on shares, I am including here. But while calculating tax liability, you should remember LTCG on shares is exempted up to rupees 1 lakh. Over 1 lakh rupees is taxable at a flat rate of 10%. That is the rule for taxability of long-term capital gain on shares. But right now, I am not concerned about tax liability. I am only concerned about computing total income. That's why I am including all. LTCG on painting, LTCG on shares, STCG on shares, STCG on land. Total is this one. Last one, qualified saving 1 lakh. This qualified saving deduction will be allowed under section ADC. And 50% deduction donations, 12,000. So 80G donations, deduction will be allowed. That's it. So all the points I have explained. Now see, income from house property 92,000, income from other sources, agriculture income from Pakistan, ground rent, bank interest, poultry farm income. Then income from capital gain, LTCG on painting, STCG on shares, STCG on land, LTCG on shares, total. So gross total income 15,41,000. From gross total income, deductions. Under section 80C, 1 lakh. Then qualified saving. Under section 80G, 50% of 12,000, 6,000. Then under section 80DDB, medical expenses incurred on dependent relatives suffering from chronic disease. The dependent is senior citizen, that's why 1 lakh rupees is the limit. All these points you have to write in note. Then under section TTA, when the assessee is having interest on saving bank deposit, deduction will be allowed to the least of the following two. Actual interest or 10,000 rupees fixed, whichever is least. Here actual interest is 1200. So 1200 is least. So 1200 rupees will be allowed. So total of deductions 1 lakh plus 6,000 plus 1 lakh plus 1200 is 2,07,200. Deduct 2,07,200 from GTI. We'll get 13,33,800. This is the total income. So I have explained you 7th and 8th problem in this video. Inshallah, the next problem will continue in the next video.